Hi guys, Harry Otis here. I thought I'd make a quick video here about a subject that is near and dear to my heart. And it's basically the stock market, price versus value, and how we as traders and market participants are really living under a grand delusion, especially these modern markets. So, what do I mean by price versus value? Well, Warren Buffett said that, price is what you pay, value is what you get. Okay, the price might be low for something that you're paying a low price for a high value item, that's good. Yada, yada, yada. That's not what I mean. I mean, there is a real delusion between price and the actual value of what you are getting, okay? Right here, I'm looking at the picture of the S&P 500, the SPX, okay? It's a cash settled index, but whatever. The point is, right now, the SPX closed today. I'm shooting this on Monday, the 6th of April. It closed at 66,011, okay, and 82 cents. What is that? That is a price in US dollars. Okay, so this price, 66.11, is a price in US dollars. 6,611 US dollars buys you the entire, 1 unit of the SPX, which is like 500, one stock of 500 different companies altogether. You're quote unquote buying the market, okay? And if you look, let's go to a weekly chart, okay? Markets are screaming at all-time highs. SPX is at all-time highs. This here is COVID. This here is the tariff crash. This here is a 2022 bear market. And yet we're at all-time highs. Everybody should be happy, okay? Pam Bondi even said we are, the Dow Jones is at 50,000, not marked the top. But even that is at all-time highs, let's say, near all-time highs. So everything is sky high, yet why isn't everybody feeling rich? Okay, why isn't everybody wealthy? Even though I have more money today than I had 10 years ago, I feel less wealthy. Why is that the case? It's very, very strange. However, it's just the fact that we are living under a grand illusion of price over value, okay? So the price here, everything that you look at as a price, we have to start with a question: what is price? Okay, what is price? It's very simple. We're going back to the basics, okay? Here, the price is always something that is a swap, if you will. A price is a trade. A price is an exchange of two things. There's always two things involved in a price. It's not one price. It's not one thing. It's always two things. And it's always a trade, a swap. The SPX here, you are trading 1 unit of 500 companies for US dollars. Okay, that's it. You're giving US dollars, you're getting back one share in 500 different companies. Okay. So we're like so far out of that paradigm that we don't even get it. Okay, meaning that this could be priced in anything. It doesn't have to be in dollars. It could be in anything. Okay, but what is the value, the actual value of those shares in those 500 companies? Well, here, according to if you price it in dollars, we're at all-time highs. The value of the quote-unquote stock market, 500 biggest companies, is near all-time highs. We should be pop the champagne, right? No. Okay, the people who really understand, I feel, what price is really barter. Okay, you're exchanging one good for another. We're still in a barter system, even though we have a price. Okay, and the people that understand this the most, I think, are currency traders. Okay, currency traders, every currency, it's called a currency pair for a reason, because if you look at, let's say, the US dollar, USD CAD versus the Canadian dollar, okay, the most famous exchange rate here because I'm Canadian. Okay, so here we have the US dollar Canada. What does that mean? It's at $1.39. But which dollar? Canadian dollar, US dollar? Where here we're looking at US dollars. Okay, the base is the US dollar. So I'm getting 1.39 Canadian dollars for one US dollar. Okay, it's a pair, it's a trade. Okay, currency traders know this the best. This tells me nothing. Okay, because this is from the US point of view. From the Canadian point of view, I can tell you the exact same information as this picture in a completely different way. And that is if I did CAD USD. Okay? Now it's at 0.71. The CAD USD is at 0.71, meaning now this is the point of view from the Canadian dollar. One Canadian dollar only gets me 0.718 US dollars. That's the switch. But it's telling me the exact same thing from a different perspective. How do I know the value of the Canadian dollar? Well, I don't really. I just know it as a price versus the US dollar. I don't really know the value of the Canadian dollar. And if we look over time, okay, let's say a month, okay, the average might be around 0.8. Okay, this middle line might be around 0.8. So on average for like since let's say 1988, it's 0.80 cents. Okay, so 1 Canadian dollar buys 80 cents US. Does that mean the average, like the US dollar or the Canadian dollar, is basically the same value as it was for 30 years? No. It gives you no metric on value. This is just a comparison between two currency pairs. It means absolutely nothing in terms of value. How do I know? Because this could be 0.8 for centuries. It could be a flat line. It could be a horizontal line. Here, let's draw it. It could be a horizontal line at the average of 0.8 for 30 years. And you would say, well, the value of those two currencies is pretty much nothing for 24 years. It's very, very stable, assuming it's a flat line. Okay, and that would be wrong, because the value of both currencies could be going down by 10%. It could have gone down by 50%. Both currencies could go down by 50% at the same time. Okay, meaning that the value would be dropped lower. Like both countries are suffering from inflation, and yet we still see the price at 0.8. Okay, so the price means absolutely nothing when it comes to value. Okay, so that's all I wanted. I wanted to say that to really tell you guys that price doesn't show anything. Okay, because this is dollars, Canadian dollars over US dollars. Okay, and the reason that is because like we're looking at a numerator over the denominator, and if the top goes down by 10% and the bottom goes down by 10%, this ratio won't change. Okay, but it doesn't tell you that both drop in value by 10% in value, and yet the price is still 0.8. Okay, it's telling you that nothing has changed because, let's erase it, because we have a numerator and a denominator that fluctuate. So we're comparing two things that move. So we don't know value. If you have your numerator, especially the denominator, something that's denominated in the denominator, it should be steady. To get a real value of something, we need to have something that is steady. Okay? We can do this for any product. Oil. You see, oil is in the news. Okay? Oops. Let's go back to screen. Oil. U.S. oil. Okay? This is in the news. It's been going up and down, okay? Look at them. This is the monthly chart of oil. Okay? It's at $112. Okay? But dollars. It's priced in dollars. Okay? So you have the numerator going up and down like crazy, and you have the denominator going up and down like crazy. Does that mean that oil is more expensive right now? Well, in dollars it is. But what is the true value of oil? We don't know. Why? Because the numerator, oil, moves up and down based on supply-demand factors and monetary printing. And the dollar goes up and down based on fundamental factors like, the fiscal policies of the United States government, the monetary policy of the United States government, the trading balance, between the U.S. government and every other country. So the value of the dollar goes up and down based on these fundamentals, and so does the value of oil. And you're comparing two crazy things that move crazily with each other to get this price. Okay? It's not a good metric when you have your denominator moving like crazy. What you should do, what you really, really want, is to measure a product in something that is unchanging. Okay? You need to have something that is a solid measuring stick, a solid ruler, a solid benchmark. In other words, like the crypto bros say, you need a stable coin. You need to measure something in a stable coin. Okay? And there's only one good that has remained stable for millennia and centuries that will serve as the perfect measuring stick, the perfect determinator of a value, and that is gold. Okay? Let's go to gold here. Let's go to another one because here, XAU. I don't have any markers on this. So gold is at all-time highs. Gold is at all-time highs, but it's not really. It's based in US dollars. It's $4,600 US dollars a share. Look at it, going all the way back. Again, a monthly chart. Going all the way back to 1999. Gold is up massively. But is it? No, because gold has not changed. Gold does not change. It is it stays the same. This is not a picture of gold going up. This is a picture of the dollar going down, whatever it's priced in, going down. It's telling you that the dollar has lost since 1999. It's lost what? 90% of it, 80% of its value, maybe more. It's crazy. This is why your denominator matters. Okay. So what you want to do if you want to find the value of something and not just its price, is you have to measure X good. Okay. You have to measure X good divided by something that is stable, that doesn't move over time, and that's gold. Gold will always stay the same. It doesn't oxidize. It has the same properties. An ounce of gold a billion years ago is the same as an ounce of gold today. Yes, we can discover 1 or 2% of it every year by mining, but the population of the earth goes up 1 or 2% every year, so it stays flat. Okay, so it's the closest thing we have to a stable coin in reality, and it's tested this, it has withstood the test of time. So if you want to know what the value of something is, you put it vis-a-vis gold. Okay, and you can do that for every asset. Okay, every asset priced in gold will tell you its true value. Okay, so let's see here. What is the true value of SPX here? We see that, oops, let's go to here. Yeah, let's go to SPX. Okay, what is the true value? Okay, let's get rid of value versus price. You get it? This is a monthly chart. So what is the true value of the S&P 500 if we don't measure it in dollars, but we measure it in gold? Okay, and the way to do that is you do SPX and you divide it by, instead of dollars, because here it's SPX divided by the US dollar, but here we do SPX divided by gold. Okay, look at it. Look at this chart. Okay, this gives you a chance, or SPX divided by gold, this one. Okay, because we can go back further. Okay, this is a chart of S&P 500 priced in gold. Okay, and as you can see, going back through time, it peaked. The S&P 500 in terms of gold peaked in the year 2000. Okay, and it's been going down ever since. Yes, look, since from the year 2000 to 2008 to 10, the market is actually losing value versus a stable coin, versus the stable coin of the world, gold. Okay, and yes, there are periods of time here, like from 2011 to, let's say, 2022 or even 2020, real stocks have gone, the real economy, the market has been going up versus gold. So here we can see that this is a period of time where the market from 2011 to 2018, let's say, really outperformed in real terms. Forget about money printing. This takes it all into account. Okay, but ever since then, ever since 2021, we're going down. Look, the market priced in gold is actually going down. You are getting less, okay, of your money's worth. We are not trading at all-time highs. If we just look at SPX, all-time highs on a monthly chart. This says that we're rich. Well, the reality is you're not rich, because if you price it based on gold, a real stable coin, you will see that you're not even close to the halcyon highs of the 2000. This is after the 2000 crash. As you can see, during the Warren Buffett era, 1980s, the market ripped in real terms for 20 years. From 1980 to 2000, Warren Buffett, buy all these good companies, buy all the companies that have stable earnings, have a moat, super solid. Yeah, that worked for 20 years. But ever since the 2000 era, when we've been printing money, not really. The stock market is at all-time highs, but in reality, the value of the market is not at all-time highs. It's just the price. The price is, but not the value. Because gold is the only stable coin out there. It measures it hasn't moved. So when you measure something vis-a-vis something that doesn't move, this is the real value. You can go all the way back in time. There's, all the way back in time. This is fascinating to see. This is the 1920s when the market goes up, and then boom, all the way down to the 1930s in the 29 crash. Okay, and then nothing. The market did nothing till 1950. And then from 1950 onwards, we had a real bull market where real growth was happening. Okay, because the price of gold was the same, $35 an ounce. Okay, now in 1971, when we went off the gold standard, boom, the market tanked versus gold. Okay, and it took forever for that to come back. Again, we mentioned the 80s was the golden period from 1980 here to the year 2000. This is when real wealth was made in the States. Real companies were making real money on a real basis, not since the year 2000. So yes, although the markets are nominal highs, you're getting a high price, you're not getting high value. Okay, and that's what I wanted to say. If you have to price something to see its true value, price it vis-a-vis or versus gold. Okay, you can even look at U.S. oil. How has oil been doing? Just to take a guess. Okay, U.S. oil versus gold. What do you think what do you think it happened? Do you think oil is at all-time highs? Do you think there's a spike in oil? No. This is it, down. The price of a real commodity goes down over time if you have a good economy. Okay, this was the price of oil in real terms is actually down since the year 2000 or 2007 here. Okay, and if you look, it's pretty stable. It stays around like the 0.06 level, and we're at 0.02. So oil is very, very cheap in real terms, even at 100x $11 a barrel. Okay, but because we are living in highly inflationary times, it hurts. Okay, because your wages haven't kept up with the inflation. Okay, and do it with anything over gold. You'll see the real value of something. So oil is fairly cheap in gold terms, okay, but not in dollar terms. In dollar terms, it's killing people. Okay, it's at 112. So that's my point. My point is, look at things that are real and not illusion. The SPX on a monthly chart is an illusion. You are not this wealthy, my friend. All right. Okay. So I'll talk to you guys later. Bye-bye.